The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we closed out the week on Friday ahead of a 3-day holiday weekend with some decent positivity in the grains and oilseeds, soybeans and corn in particular. Let's take a look at the trade action as we wrapped up the week and prepare ourselves for the week ahead, post-inauguration day and more. Joining us for a conversation, Brian Irie with Crossroads Co-op. Brian, it's great to have you back on Market Talk. How are you, my friend?
I am well, sir. Thanks for having me back again. It's good joining you.
Absolutely. Absolutely. Well, on a good day to talk about the markets after Friday's session, Brian. You know, I was a little concerned. I think a lot of folks were as we started a strong week off, and then midweek we got to Thursday, big sell-off, but yet we kind of rallied back and clawed back a lot of what we lost on Thursday during Friday's trade in both soybeans and a good day in the corn market too, right, Brian?
Absolutely. Beautiful day in the corn market. The nice rebound. And I'm on the same page as you. I felt like yesterday was just a very disappointing day after we'd had a tremendous amount of momentum after last Friday's USDA report. It kind of felt like we hit a brick wall, but this morning we found life, and we've heard rumors of some corn trading off of the PNW this week at numbers close to the Gulf. Today, late in the session, I saw notes from a couple of different sources that there is reportedly some Chinese interest in corn, and that there's been some conversations going on between soon-to-be President Trump and President Xi, and I think that was probably the catalyst behind the rally today. We'll see if that plays out, I guess, as we move on through next week.
It largely felt in corn and soybeans like an old crop rally on Friday. So maybe let's lean in there first, and then we could talk new crop a little bit more. But I feel like, especially in corn, you know, that 485 level, 490 level futures, even though I know basis has been widening and weakening in some areas, these feel like some actionable levels here, Brian. What do you think?
They absolutely do. And we were seeing good movement in cash grain from 4.25 up to 455 from the producer. Once we got through last Friday's report, the farmer has just been a scale up seller on a regular basis. I think doing the things that they need to be doing in this environment, given that really 4 weeks ago, we were sub break even values, and now we're edging back into I don't think anybody's getting incredibly rich, but we're on the good side of these prices today.
Very true. Very, very true. As you look at soybeans in particular, you mentioned the talk here between President-elect Trump and President Xi of China, and you know, who knows what's going to happen with that situation. But the soy complex, I know, has been really worried about tariff potential, and so maybe getting a pre-inauguration pop there, so to speak. But I know the balance sheets between corn and beans post WASDE report, they look a lot different, right, Brian?
They absolutely do, and I think it's just it shifts the paradigm on corns especially, and then anytime you start getting soybean carry out down closer to 300 million, it raises an eyebrow, and some premium should be added. And I think between the balance sheet on soybeans and the dry weather that we've had in Argentina here over the last month, it was enough to be the catalyst to rally soybeans very, very significantly. And in corn, it's just an absolute game changer. As we look at this old crop situation, I mean, we're at values that I don't think many on my side of the desk would have anticipated for many months to come with the previous numbers that the USDA was working with.
Well, old crop, definitely a lot of opportunity here, especially heading into the 3-day holiday weekend. What about the new crop picture, though, in quartered soybeans? Let's shift and talk there. Start on the corn side, Brian. What are your thoughts when it comes to new crop corn right now?
I think we're undervalued in the new crop months at this point, given the 1.54 billion bushel carry out, Jesse. It's hard to imagine that we haven't rallied a little more out there, and that may be because there are still some unresolved issues potentially that, or at least that the trade perceives that there's some unsolved issues here with the 2025 balance sheet. Obviously, we still have nearly a 900 million bushel unshipped export book, and many are looking that maybe those bushels don't get shipped with cheaper corn out of South America in the May forward timeframes, probably July forward in the case of Brazil. But it we a lot of that export business got put on when U.S. futures were down around $4. Maybe got put on as a hedge, and that doesn't mean that it's necessarily going to get shipped out of the United States. Some of those sales could get potentially canceled and moved to South America. And I think you've got those kinds of things that we're looking at. And without China around the market, that is a good piece of demand that the USDA still has projected for the 24-25 marketing year. And if it doesn't develop, it's certainly something that is going to have to be reconciled down the road here.
Let's go over to new crop soybeans, and I'll throw these thoughts here as well. I know we had another strong NOPA crush number that came out here for December. Plus, we've had all this 45Z climate smart related guidance, and there's some question marks there moving forward. But overall, there's been some what could be considered positive notes for the soy complex. So, thinking about all of those thrown in as well, what's your take on new crop beans right now, Brian?
I think it's much the same situation. There's a lot weighing on South America right now, obviously with Argentina, as we've mentioned, and the possibility of yields declining down there. But it does look like moisture moves in. In fact, our long range forecaster sees it getting very wet down there. But I think on the domestic front, we're kind of right there borderline. We can't afford to export a tremendous amount of beans. We are seeing product back up, which would indicate that maybe crush does slow down a little bit here moving forward. Soybean meal basis is very, very cheap right now and just seems to get cheaper by the week. But I think, again, moving forward, there's a lot to look at, including the corn bean ratio for new crop. The numbers, just looking at them here as we speak, are still not really favorable for a lot of soybeans getting planted. I think corn should still be the predominant crop on those acres that could get switched. So a lot of questions there. And typically when you have those kind of questions, the market would add value to put some type of a premium in there in the event that everything doesn't go perfectly.
Should ask you on the wheat markets as well. I know these markets have been choppy, even post USDA report. Your feelings across all three wheat complexes right now, and I know a strong dollar is not helping the situation there, Brian.
A strong dollar is not happening, and not only are the futures choppy, export sales have been choppy, shipments have been choppy on the export side. Domestically, there's just adequate wheat everywhere. It's backed up into the country. The producers had a hard time finding attractive basis levels. Although I will say, from a commercial perspective, we have seen various protein types pick up in value here a little bit over the course of the last month. But being an ex-drylander myself, that is a market I follow pretty carefully. And the wheat market has just been in a rut for months. I mean, we got a nice little rally back in late October before Mother Nature literally dumped on most of the hard red winter wheat production areas across the United States. And then we fell right back into that rut. We break out 10 cents one side or another of essentially 550 to 555, and we can't maintain anything below that, and nor can we maintain anything above it. And I think until you get a real problem potentially with Russia production, which is obviously in question, as it remains very dry and the ground is bare there, from what they tell me, I think it's going to be hard unless you find a catalyst like that somewhere around the globe to drive us where a big supply is compromised.
Brian Irie with Crossroads Co-op joining us here today on Market Talk. I'll throw this question to you, Brian. Thinking about the wheat market and how choppy it's been and price action, and you mentioned the ample supplies in the countryside in the U.S., could we see more wheat make its way into the feed bunk on the cattle side, especially with corn continuing to grind its way higher? What's your thoughts on that?
I think that it's an interesting situation, and we hear, I wouldn't say daily, but almost weekly. Another feed yard in the Texas Panhandle has bought X amount of wheat, and obviously they're incorporating that into their rations while they're feeding corn at the same time, or milo. And even complicating that situation is a lot of milo across Kansas, Oklahoma, and Texas that typically gets exported to China is not going to get exported to China this year. I think that ship has sailed, and with every day that we see corn higher, wheat lower, I think it enhances the chances that wheat gets fed at a very large volume here as we move into June, July, August, and September. I think it's a real threat to corn basis as we move forward. But on the wheat side, it's good to see, because it does give us another demand center that we badly need to work through some of this U.S. inventory.
Absolutely. Absolutely. On the cattle here, a little bit more, just in general. I know you follow those markets too. And obviously, we've had red hot cash markets here for cattle. Futures have been super strong. It was pretty mixed to head into the holiday weekend on Friday. But what's your take? I've been asking folks this here for several weeks now. What is your perspective on the current state of this cattle market?
I think it's very interesting, and we're obviously seeing feeders stretch out to buy cattle, to buy feeder cattle again. My goodness, you talk to some of these ranchers out here that have sold cattle, just as you've mentioned here, over the course of the last 30 days. $2,000 for a 725-pound steer is just incredible, in my opinion. And I think the situation is somewhat tenuous. I mean, you're going to continue to struggle for cattle, but you've added 35 cents a bushel to corn futures here over the last week. You're paying that kind of money for feeder cattle. Obviously, live cattle are bringing good money too. It is just a function to me of how long this situation can sustain itself. And, do we start to do some harm to U.S. beef prices by importing more beef? And it's a complex situation. And it seems to me the only resolution is getting domestic feeder cattle numbers back to the point that they were 5 or 6 years ago. And it's such a slow process. Obviously, we're feeding cattle to heavier weights than we were 4 or 5 years ago, even, and we're making more beef that way. But it's a situation that just doesn't seem sustainable to me forever.
It's a good point. Very true. As we look ahead here, obviously, we'll get back to trade action after Martin Luther King Jr. Monday and Inauguration Day. I know there's so many unknowns ahead with what could or could not happen immediately with incoming President Donald Trump here. And so you look broadly at the markets, you look at the macros, et cetera. I guess, what final thoughts would you share? What is on your mind as we work into a new administration and really get into the second half of January, Brian?
I feel like we probably still watch South American weather very closely here for another 30 to 60 days. I think that will continue to be at the forefront. I think prospective plantings for 2025, those late March reports are going to just be absolutely huge. We've gone from a situation where I think a month ago, we feared planting 94 million acres of corn in 2025. And I think now we probably need to plant 94 million acres of corn in 2025. I think we have to watch that very closely. This unshipped corn sales on the export side, I think, is a big deal that could come back to haunt the corn producer if we start to put bushels back into that balance sheet. I think we see a continued slowdown in soybean exports. I think that's going to be a hurdle that we have to overcome while this tariff situation gets sorted out. I think the trade has a tremendous amount of anxiety over that situation that's probably overblown to a large degree. But I think the trade wants to see facts and what is going to happen exactly as we move forward. And it's hard to say. I mean, it's with the new administration coming in, there could be a lot of changes coming down the pike, and you don't really want to see them impact the economy in general. And from our sector, obviously, you don't want to see it create any harm for the ag sector. And I really don't feel like it will, but you just don't ever know what's around the next corner.
A lot of things to pay attention to. We appreciate the time and the perspective. Brian Irie with Crossroads Co-op. Thanks for joining us, Brian. Have a great weekend, and we'll get you back on the show again soon.
Appreciate it. Thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.